bull markets, bear markets, but sometimes it can get a little tricky and confusing as to what the definition of either truly is. We turn to our resident professor. Brian Cheung is here with another edition of Yahoo U. Brian?
Well, Adam, class is in session. I just want to begin everything by saying rest in peace to the bear market of 2020. So on Tuesday, the S&P 500 hit a new intraday high, and that officially ended the market's deep but brief bear market and welcoming in officially the bull market of 2020. So just as there are cats and dogs, there's up and there's down, there's also bulls and bears. But what defines one, and who gets to say when we're in one or not? Let's take a look at exactly what happened in the S&P 500 to date. So this is an illustration, again, year to date, what's happened since January, and it's pretty self-explanatory. So February 19th was the tip top of the market. At the time, it closed at 3386.15. That was, again, on the S&P 500. And then we fell off that cliff as the coronavirus concerns began to wash ashore here in the United States. And the bottom was here, March 23rd, a pretty precipitous fall. That was about 34% from that last high. But since that point in time, we've been off to the races. So bulls have been going off to the moon. But the thing is here, we've technically been in a bull market for the last 5 months or so. So then why didn't we officially declare it as a bull market until Tuesday? Well, we need to rewind to late March or early April. At the time, we didn't really know if these gains that we initially saw would at some point maybe reverse and then hit deeper to a new low. So as you can see here, the problem is that you really don't know if you've reached a bottom or a top in the market until you can look back at the S&P 500 in hindsight. So there are a few different definitions of what defines a bull or a bear market, but roughly one definition of a bear market is when the market has fallen more than 20% from the previous peak. And we'll know generally that it had ended when the market reaches a low and then it rises by 20%. So for a bull market, this definition is reversed. So we'll know generally that a bull market will have begun when it hits a low and then it reaches or rises about 20% from that previous low. And we'll know that a bull market will have ended when we reach a top and then it falls from that point in time by about 20%. So let's go back again to what's happened year to date. For that reason that I just explained, we weren't able to declare that we were in a bull market until the S&P 500 reached a new all-time high, which it did on Tuesday. At the time, it closed at 3389.78. But again, until we reached that point, we never really were officially in a bull market. So again, now that it's official, we've got some fun stats on this bear market in memoriam from Howard Silverblatt over at S&P Dow Jones Indices. This was the shortest bear market ever. It was just 1.1 months. That's more than half the length of the previously shortest bear market on record, which prior to this was the 1990 downturn there. That was about almost 3 months or so. Clocking in at third place in terms of short length, it was 1987, which covered that Black Monday in October of that year. But even though it was very vicious, what we saw in 2020, we have to also recognize that it wasn't the worst. So again, for reference, the bear market of 2020 saw about a 34% contraction, but that doesn't crack the top 3 downturns by percentage lost on the S&P. The worst was, probably not surprisingly, the Great Depression that began in 1932, 86% contraction in the S&P 500 at that time. The second worst was only 5 years after that. That was the 1937 recession, which lasted over 5 years, I should note. And then the third worst was about the same, a 57% contraction in the S&P 500. That was in the Great Financial Crisis only over 10 years ago. So even though we find ourselves in a bull market, we need to remind ourselves, though, that the stock market is not the economy. You've heard this probably a million times before, but one example is that the definition of a bull market doesn't really closely trace the definition of a recession. That's more economic focused as opposed to market focused.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.